Hey everyone, Uber stock has been performing excellently in 2023. It's one of the bigger surprises for me in 2023, the performance, just how good the company has done. I was always a skeptic of Uber's business model being able to achieve profitability and positive cash flow. It's showing tremendous growth in those two metrics, and that's helped the stock price jump here in 2023. So much so that it announced it was going to be included in the S&P 500 index. So in this video, I'm going to review what that inclusion in the S&P 500 index could mean for Uber stock investors. I'm also going to look at Uber's latest quarterly results, and then I'm going to answer if I think investors should buy Uber stock ahead of that inclusion in the S&P 500 index. So let's jump right in, starting with what the S&P 500 index inclusion could mean for Uber stock investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Uber will be added to the benchmark S&P 500 index prior to the opening of regular trading on December 18th. So we have several days here before Uber gets included in the S&P 500 index. So inclusion in the S&P 500 can be a big boost for a stock because it's widely tracked by many funds designed to mirror the holdings of the S&P 500, which is at the heart of many 401k accounts. So by getting included in the S&P 500 index, Uber stock will be purchased by more individuals from purchases from retirement accounts. So automatic purchases that individuals will not even know that they will be making, but because they participate in a 401k or a retirement account, or maybe they own passive index funds, those index funds will purchase shares of Uber to include, and so there will be some buying pressure on Uber stock, which could lift the stock price higher after it gets included in the S&P 500 index. Already, Uber stock is up 142% so far in 2023, but this stock price isn't just up based on hype or momentum. Uber has justified these increases with phenomenal performance. Let's take a look at just how good Uber has performed, especially in the latest quarterly update. So, as you might already know, Uber has two sides of the business. It has the Uber Rides segment, where it offers rides to people wanting to go places that don't have a ride. Uber also has the Uber Eats segment, where it delivers food to people's homes if they want to stay home and order food to eat. So those are the two major parts of Uber's business. It also has a freight segment. That's a smaller part of the business that we won't get too much into in this video. So gross bookings grew 21% year over year to 35 billion in the most recent quarter, with the mobility segment growing 31% and the delivery segment growing 18%. Out of these two, what surprised me more is the delivery segment growing 18% year over year. Remember, during the earlier stages of the pandemic, when people were not allowed to go out to eat at restaurants, this food delivery business absolutely thrived. It exploded, right? And it exploded in 2020, in 2021, and in 2022. And so I was thinking, as were many investors, that when economies fully reopened and restaurants fully reopened, and people had the option to go out and eat at restaurants in person, that this ordering for delivery at home, this part of the business would stop growing, maybe reverse, or at least be flat. But Uber has surprised with the continued growth in this segment. And that's been something that really surprised me as well. It seems that people are willing to pay for the privilege of this significant convenience that it offers. You don't have to get out of your house to go out and get the food that you want. You can just order it for delivery at home. Sure, if you look at it as a percentage, the fee to order food for delivery at home is expensive. But if you just look at it in dollar terms, it costs less than $10, the fee to have food delivered to your home. And for many people, according to the data here, $18 billion in gross bookings, it's worthwhile. It's worthwhile for them. And so this has been a pleasant surprise for Uber stock investors. And that's helped income from operations jump to 394 million, and that was up by 889 million year over year. They were generating significant losses last year. I was skeptical that this company could ever generate profitability because they had to pay so much money to drivers to deliver those meals and drivers to offer rides to ride sharers. But it looks like they've reached a scale large enough where now they're generating profitability. Net cash from operations was 966 million and free cash flow was 905 million. So if the company can sustain this, they've now reached the level where they can fund their business. They don't need to go to investors and ask for more money. They could, as they went, they just recently offered a convertible debt offering of over $1 billion to raise cash. And given the stock price has jumped so much, they capitalized on the opportunity. But they didn't need to because they've still got $5 billion in cash on the balance sheet. And it looks like they're at a sustainable pace here. But it could be that Uber management is just being precautious and taking that money now because maybe the business turns south and they want to make sure they have that money just to be safe, just to be cautious and going forward so that they don't kick themselves in the back for saying, man, we could have raised $1 billion when our stock price had jumped over 100% and we missed that opportunity. Management is forecasting fourth quarter gross bookings of 37 billion at the midpoint, which would be above the 35 billion in the third quarter. So management is expecting continued growth in the fourth quarter. So it's not the case where management thinks this is going to slow down. Again, excellent results here from Uber. So in the 3 months ended September 30th, Uber had 142 million monthly active platform customers. That was up 15% year over year from 124 million monthly active platform customers. This has been one of the bullish cases for Uber stock, is that it has a massive market opportunity, a massive market opportunity. It operates in many parts of the world, and even when it doesn't operate in those parts of the world, it has ownership stakes in companies like Didi that do operate in other parts of the world where Uber has exited. And so it has access to the worldwide market for food delivery and ride share, which is proven to be something that consumers are growing to love. And if they can prove that they can operate this business profitably, man, the opportunity is huge. The opportunity is huge. And that's what I've been saying with Uber stock over the last 5-6 years. The opportunity is huge, but I just didn't see them reaching that scale where they generated profitability, because up until this point, every time they grew larger and larger and larger, they just lost more and more money on the bottom line. They didn't demonstrate economies in scale that they have demonstrated here in 2023. As you could see here, free cash flow jumped by over 153% from 358 million in the 3 months ending September 30th to 905 million. So on and on, these metrics continue to show Uber's excellent performance and Uber continuing to prove me wrong here in demonstrating their profitable growth. And by the way, kudos here to the new CEO, Dara Kashkari. I think he's done an excellent job in turning this business around. Ever since he came in a couple of years ago to take over from the founder, he's done a phenomenal job in improving this business, in making decisions to divest parts of the business, in the decisions to cut costs. I think he's done an excellent job here, and the evidence shows. Here's an important metric I look at with Uber and other platform companies is the percentage that they take from the revenue on the platform. And for mobility, this increased from 27.9% to 28.3%. For delivery, it actually decreased from 20.2% to 18.2%. This is an interesting decline here. It indicates Uber is making it more favorable for drivers to work on the platform. This is the percentage that Uber keeps from the fees that Uber charges for you to order food or for you to order a ride. The other part of the money goes to the driver when you're ordering rides. That the more than 70% of that fee that you pay goes to the driver. And then for delivery, part of it goes to the restaurant, of course, and then part of it goes to the driver, and then the rest of it goes to Uber. That's what it does. It's a platform that brings together customers and providers of the service. Uber doesn't own the services that it provides, right? The drivers are categorized as contractors, and they can choose whether or not they want to work in a given day or not. And then the same thing with restaurants, right? They're partners with Uber. Uber doesn't own that food that gets sold on the platform. It just says, hey, McDonald's, do you want to make your food available on our platform? We'll let you put it on our platform and we'll take a fee from all of those sales. I like that business model. I like that part of the business model. And this is the key here, is the percentage that Uber will get to keep at the end of the day. Can Uber continue to boost this percentage, or can Uber grow at a scale large enough where this percentage is enough to generate profitability on the bottom line? It looks like it is. It looks like it is, given the performance in the most recent 2 quarters. Two more things to highlight: that Uber offers a monthly membership where people can pay a monthly fee and then they get discounted rides and discounted food delivery options. Uber has risen that total to 15 million members. These are high volume users. These are users that use Uber so much so that they want to pay that monthly $9.99 fee so that they can get more access to the rides and the delivery side of the business at lower fees. And then another thing Uber is increasing is advertising. So active advertising merchants during the quarter exceeded 445,000. That was up more than 70% year over year. This is a segment of the business I've been highlighting for some time now, because remember, a lot of people open the Uber app, right? There's over 100, nearly 150 million monthly active users. Of course, advertisers would want access to those 150 million active users that are opening the app looking to go somewhere or looking to order food. And so I think the advertising business, it's a lucrative business, right? The profit margins in the ad industry are strong. If you look at Alphabet, Facebook, and others, profit margins are strong. And so as Uber grows this part of the business, I think it can help the bottom line significantly. So finally, let's look at valuation before I answer if I think Uber investors or those interested in Uber should buy the stock before it joins the S&P 500 index. Uber right now is trading at a price to free cash flow of 53 and a forward price to earnings of 31. These valuations are up since the company reported those quarterly results, and understandably so. We saw just how good those results were. But still, even though the valuation is higher, I think it deserved to be higher. And I would recommend this stock as a buy. So yeah, I would say it might be a good idea for investors to buy Uber stock before it joins the S&P 500 index, or even after it joins the S&P 500 index, as long as the valuation doesn't increase by all that much after it joins the index. The company has a massive worldwide market opportunity, and it's already proven it can operate this business profitably, generating cash flow on the bottom line. I like its prospects. I like the management team. I like what they've done with the company. So yeah, I'm recommending the stock as a buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.